Schaff Trend Cycle is a forward-looking leading indicator that generates faster, more accurate signals than other indicators, such as the MACD, because it considers both time, through cycles, and moving averages. The Schaff Trend Cycle is commonly used to identify market trends and provide buy and sell signals to traders. Schaff Trend Cycle is a type of oscillator and is based on the assumption that, regardless of time frame, trends accelerate and decelerate in cyclical patterns. Many traders are familiar with the MACD charting tool, which is an indicator that it used to forecast price action and is notorious for lagging due to its slow, responsive signal line. By contrast, the STC signal line enables it to detect trends sooner. In fact, it typically identifies up and down trends long before the MACD indicator. While the Schaff Trend Cycle is computed using the same exponential moving averages as the MACD, it adds a novel cycle component to improve accuracy and reliability. While MACD is simply computed using a series of moving averages, the cycle aspect of the Schaff Trend Cycle is based on time, for example, number of days. Although the STC was developed primarily for currency markets, it may be effectively employed across all markets. It can be applied to intraday charts, such as the 5 minutes or 1 hour charts, as well as daily, weekly, or monthly timeframes. What makes this indicator interesting is that it's a combination of MACD and fast stochastics with a cycle component and a smoother to capture market prices more comprehensively. It's basically a combination of leading and lagging indicators. So let's discuss the main problems of the MACD and stochastic. The MACD follows price with its 12 and 26 period exponential moving average and the 9-day EMA signal line. In its capacity, it's a trend indicator, yet it is lagging because it doesn't always lead prices and is prone to false signals, especially in fast-moving markets. So you have to adjust the settings to satisfy your price and market objectives. The stochastic is also lagging. The problem with stochastic is its ability to generate false signals, while markets can take off before signals are generated. Part of the problem with stochastic oscillator is its concentration of the 3-day simple moving average as the signal line. False signals and slow reactions are just the beginning of the problem, especially for short-term traders and day traders, because the 3-day simple moving average is too short to represent fast markets and act as a true trigger line. Schaff Trend Cycle tries to fix these problems by incorporating a shorter-term EMA set with a default at 23 and a longer-term EMA with a default at 50. This remedies the MACD and fast stochastic false signal. This combination can be employed to capture trends, but it doesn't incorporate entries and exits fully. To fix this, a signal was needed. The MACD's 9 exponential signal was not always effective, while fast stochastic signal line was also a failure. You need a true signal that would capture a true trend. This came from cycle theory, a theory never fully incorporated into an indicator. This signal line was derived from theories and practices of 10, 20, and 40-day currency cycles. The halfway point between the 23 and 50-day EMA is in cycle theory 10, so the cycle default is set as a standard 10. But this cycle can also be viewed as a halfway point of a 20-day cycle as well. This is the signal line that denotes trends, ranges, or congestion. The developer of this indicator considered that currency cycles generally come in 10, 20, and 40-day cycles. These are measured by daily and weekly candlesticks. In addition, you must know that not all highs are cycle highs and not all lows are cycle lows. One of the problems with the STC indicator is that the signal line can get stuck in overbought and oversold territories for extended periods. This is because cycles haven't completed their time, but we'll discuss these problems later. So how does it work? The main idea behind this oscillator is to combine the benefits of trend and cycle indicators and minimize their drawbacks, such as lags or false signals. The main goal of the STC is to identify or confirm price direction and market turning points. Here is how to understand its readings. There are two thresholds, 25 and 75. When the indicator crosses above the 25 line, an uptrend is observed. When the indicator crosses below the 75 line, a downtrend is believed to be present. When the indicator is between the 25 and the 75 lines, the trend is developing in one of these two directions. When the indicator turns into a straight line, which only happens in its uppermost and lowermost points, the asset is either overbought when above the 75 line or oversold when below the 25 line. In both cases, a trend reversal can be expected, but no exact timeline is provided. Now, how to apply the STC indicator in trading? The Schaff Trend Cycle is a pretty straightforward indicator, as there are not so many ways in which it can be used. And remember, though originally was designed for Forex trading, it can be effectively applied to all asset types and on all time frames. Here how traders usually use Schaff Trend Cycle. When the indicator goes above the 25 line, the trend is believed to be taking a positive turn, according to the indicator. It is when traders consider opening a buy position, but only if the confirmation is received. For example, a candle after a current one that moves in the same direction can be considered a confirmation. Readings of other indicators that go in line with the Schaff Trend Cycle can also be treated as a confirmation. The same rule applies to negative trends. When an indicator goes below the 75, some traders consider opening a sell position, of course with confirmation. STC is a leading indicator, which means that it sends a signal before the price move has occurred. It also means that it lacks the accuracy of lagging indicators and should be used in conjunction with other technical analysis tools, never on its own. So buy and sell signals are generated when the signal line breaches 25 at the bottom and 75 at the top. When the signal line breaches 25 and is heading up, this is a possible buy or a long position. When the signal line breaches 75 and is pointing down, this is a potential short. One exit possibility is when the short trade hits the bottom and breaches the 25 level, and when the long trade hits the top and breaches the 75 level. But if the signal line is pointing in the right direction, you may choose to stay in the trade, since currencies can easily trend to the high 90 level at the top and near 0 at the bottom. It's a good idea to find confirmation through candles. Before the long position, make sure you have an upward candle and a downward candle for shorts. Doug Schaff, the developer of this indicator, recommended a confirmation by entering on the second candle up for longs and the second candles down for shorts. Simple price action like paying attention at the market swings, like higher highs and higher lows, are even better. Looking at this Tesla chart, we can first apply the trend filter, in this case an uptrend, and look to take only buy signals when the indicator breaches 25. We had some decent signals just by paying attention to the main trend. The same for a downtrend. We have lower lows and lower highs, so we take only short signals when the STC crosses below 75 level. Here are a few trade examples using Schaff Trend Cycle indicator. Settings can be adjusted according to various timeframes. For example, Schaff recommended you try smaller EMAs for longer timeframes and longer EMAs for shorter timeframes. The smaller the number used for cycles, the more turns you will witness, while the higher numbers will forecast fewer turns with more cycle accuracy. What you want from your adjustments is for the signal line to perfectly follow prices and candles. While I find this indicator to be reliable when the signal line is caught correctly, there is one problem. The signal can stay in overbought and oversold conditions for extended periods, so you need an alternative exit plan, maybe a trailing stop or a Fibonacci target, to get the most profit out of your trade. If you found value and learned something new, leave us a like to show your support, and make sure you subscribe and hit the bell icon to stay notified when we upload new videos. Until next time.